and turn over presenter rights to Catherine. So I'll let you know, Catherine, when we can see your screen. There we go.
All right. Hello, everyone. Thank you for joining the Financial Impacts of Production, the Encore presentation, the original one I set up and ran in Summit in Tampa. So that is why my slides are going to have Summit AXUG on them. So thank you for joining. All right, so today the session objectives are going to be understanding the costing sheet on the production posting, understanding work in process, WIP, and absorption, understanding how raw materials go into WIP and out as finished goods, see how the labor and overhead gets applied to the product through the routes and the costing sheets, and then also reports on production, actual versus estimate costing, and some variance reporting. So as far as the agenda goes, we're going to review the costing sheet, review the BOM formula costing, mostly the BOM. I'm going to do discrete manufacturing today or BOM manufacturing today. I'll have a couple notes about formulas. We'll walk through a production order, review production order postings, and then also review some production reports that are important to be able to take a look at how the production estimates versus actuals are working. So the first poll that I have a few polls in here, and that seemed to go well with the with the seminar. So what version of AX are you on is the first poll, and Julie is going to set up a poll.
So I've launched the poll. Please take a few minutes to mark your answer on the screen. I'll give it a few more seconds and close the poll in 3, 2, 1. And I'll share the results, and that is 0 on AX4, 20% on AX 2009, 15% on 2012 R2, 50% on 2012 R3, and 15% on D365.
All right, sounds good. Thank you. Today we're going to be looking at this when I do the demo in 2012 R3. For those that are on AX365, it is very similar. It's obviously going to look different because it's a web-based product, and it is in a different area. So when you go into 2012 R3, it's in inventory to be looking at the cost sheets, and there's actually a cost section in Dynamics 365 for operations. So just a little bit about myself. I am the Managing Director of the Midwest office at Clients First. I have project management functional consulting background from the time that I moved over to the partner world. I've been a previous customer. I've been a customer longer than I've been a partner. I call myself a retired/recovering chief financial officer, came up on the accounting side, oversaw IT and accounting, put AX into 2 different end users prior to moving over to the partner side. So I've been working with AX for 13, going on 14 years now that we've changed over to 2017. And the first version that I started working on was 3.0. So it sounds like we're very concentrated in the 2009. I'll make a couple notes about what changed. There wasn't a ton of changes, but there was a couple changes going from 2009 to 2012. And then going to the new version, the functionality is basically the same. So I was a prior AXUG board member when I was a customer. So I think it's a great organization, and encourage you to do all that you can for the AXUG and invest time in that. Networking is fantastic, and these sessions have been increasing over time. We've been in AXUG, or been with AXUG since its inception. So the second poll we have here is how many people use costing sheets. And I will let Julie put that poll up.
So I've launched it. Choose yes or no. We'll give folks a chance to
take a look at that.
And I will close the, oh, let's give it a second.
All right.
Great. All right, I will close the poll in 3, 2, 1 and share the results. We have 57% using costing sheets and 43% not.
All right, sounds good. Okay, so as far as the costing sheets go, the ones that are using it, it does the absorption costing for you and it breaks it out better than if you are not using the costing sheets, which basically people typically are just increasing the rate of labor that they're applying on their routes in order to get the absorption costing into the cost of their product. You can do purchase. In 2012, they introduced the ability to do a cost of procurement costing in the costing sheet, so you can actually apply percentages of overheads onto purchases. And also, of course, we have the cost of conversion, which is the manufacturing piece that is in the costing sheet as well, and that's the same in 2009 and 2012. Cost groups, you should all be familiar with cost groups on the manufacturing side. We've got direct material. These are things used directly in the manufacturing of the product. Direct labor, so that would be direct people that are directly assigned to converting the product, and indirect costs, which are going to be your overheads, plant overhead, personnel overhead, that sort of thing. You can tag the cost groups as fixed or variable. That's for reporting purposes only, and that'll give you the ability to kind of segregate out where your variances are, and we'll take a look at that a little bit later. So when you use the costing sheet, you have the ability to section out your indirect cost calculations, which is what I said prior, and there are several different ways to assign those indirect costs. Output unit base, percentage of cost, rate per process time are just a few of those. So there's more ability to apply your overheads in a way that's different than just associating with the amount of labor that is getting consumed in your route. So this is a slide, costing sheet components. So the costing sheet component is cost of goods manufacturing. We've got the material costs, of course, the manufacturing cost, indirect costs, and then the basis for those material costs is just going to be the cost of what the materials are in the manufacturing cost, and then the indirect cost codes, of course, that's where we're talking about applying the surcharges and the rates, and those go into your accounting. We did have a fair amount of people that were accounting, that were in the production area at the session in Tampa. So if you're in the production side, you may not be as familiar with the T accounts as the accountants are, but as far as the T accounts go, this is just telling you where it hits in your financial statements, or where it's going to hit in your financial statements. So the labor absorption, of course, is going to be based on how you have your posting profiles set up, and then it's going to decrease your material, decrease your expenses, go into the cost of inventory or production cost, work in process first, then into your inventory, and then out the door is your cost of goods sold. So the next thing we're going to do is do a quick demo, a review of the costing sheet. So I'm going to exit out of here, and then let me know when the AX comes up. If we can see AX, hopefully.
Yep, we can.
Okay, thank you. So this is the costing sheet. It is under In AX 2012, it's under inventory management in the setup and then costing sheets. So if I look at the costing sheets, again, we've got this cost of purchase and we've got the cost of conversion. And the cost of purchase is new in 2012. And you could put some overheads on top of the materials. And this one is set up as a percentage of the purchase price. Based on the material, it's going to add 2% or 3% if it's in a different site. So as far as the application of the overhead, you can do it by site if you indicate which site that this is. If you leave the site blank, then it's going to apply the same overhead over all of the sites. So you can have a from date, there can be one current active, you can do pending and expire and do new overhead. That's typically done in our customers. We see that typically done once a year where they're looking at the overhead unless there's something materially that changed during the year, such as a new acquisition or additional investment in fixed assets. So this can be, once this is completed, on the conversion side, you've got some machine depreciation. If you look at the calculation here, there's no basis that can be configured for output because it's actually going to be coming on every piece that comes out rather than based on materials or labor. So there's multiple different ways to apply this. This is a percentage of cost, and that's calculation is going to be based on the material here as well. It's going to apply an additional 3% onto the cost for the internal logistics, and that's moving, basically moving it around. And we've seen some people do customizations on the cost of purchase prior to 2012, of course, to get their purchase price increased or do some additional work there. And from the internal logistics too, if you've done some customizations to add freight to your transfers, if you've got intercompany transfers, we've seen those sorts of things too. So it's more of an actual versus an estimated, but that's more typical with a FIFO situation rather than a standard. Indirect labor costs, rate process per time, again, that's just a percentage on the material. So there is the ability, these are the cost groups, of course. If I go into the cost groups, these are the cost groups, but this is the cost groups that are for labor, and then these are the materials. So the way that this is sectioned on the costing sheet is going to be the way that it breaks down when we're looking at our estimates on our production orders, and also the cost roll-up on the cost price. So I'm going to go ahead and minimize that. We'll go back to the next poll, which is if people are using process or discrete manufacturing. And Julie has opened the poll. I'm going to go ahead.
I will. Oh, yep. Give people. They're still choosing. So let's give it a minute more to go. Okay, I will close the poll in 3, 2, 1, and share the results. 53% are using process, 41% are using discrete, and 6% are using neither.
All right. All right, so as far as the BOM and the formula costing goes, there's obviously routes and then there's BOM lines or formula lines, and some people can have formulas going into BOMs and so on and so forth. But the routes are obviously the how you put the product together. So the operations, what they go through as far as assembly, and that sort of thing. And those have cost categories assigned to them. The cost categories have also a cost group assigned to them so that you can, that it's going to be able to summarize everything by cost groups at the end of the day. But the cost categories is how the labor is going to be applied. And again, if you're not using a sheet, a cost sheet, then it's going to be combined in that labor item using the cost category for the operation. As far as the BOM lines go, of course, we've got the raw materials. We can also have other sub-assemblies on the BOM lines. So those are going to all, oops, accidentally, sorry about that. I pushed the wrong button. All right, so going back, the BOM lines, raw materials, cost groups, or the cost groups are assigned to the raw materials assigned to the items. So if you've got a bill of material item, it's going to have a cost group as well. If there's a bill of material line on your BOM, formulas are going to have a similar structure where they've got raw materials, but you also have the co-products and the byproducts, which can have different costs associated with them as far as what percentage of the cost of everything that you want to put in the co-product versus the byproduct. So there's a little bit of a difference, there as far as the cost of process, cost of conversion. All right, so going into the next demo, we're going to go ahead and look at a bill of materials. And to do that, you go into, of course, product information management. In 2012 and 2009, there's just items. If I go and look at the specific bill of materials that we are going to do a production order for is my D002 cabinet. And if I go to my engineer tab and I go into my lines, then I can see what bill of materials is active and approved and what are the components on the specific bill of materials. So this one has only raw material items. I can tell by the item type here. It's just an item type item. So the cost of all of these components is going to be rolled up into the cost of material, and we would know that by going onto the view details of the item number, and we can take a look at the cost group that's associated with this item number, perhaps. Go here. The demo was not necessarily liking that from a presentation point, but the cost group is M9 here. So when we do the cost roll, then it's going to be showing this particular cost for this item is going to show up in this cost group. So the other BOM lines are here, just other items that are going to also show up on their various cost groups. And if I go into, just go into this one, of course you probably all know that there's also the ability to put a bill of materials for a sub-assembly. You can do sub-processes on the BAT or the formulas. Formulas will also have a sub-process component too. These are going to be used in the cost of this item as well, and will be associated with the cost of that item. So if I look at the route, then this route has 3 operations on it. We've got the polishing, assembly, and then padding. And then if you look at the cost category for that particular operation, then I'm going to be able, if I go to the view details here, then I would be able to see which cost group that this is assigned to. So this is how it's going to get its labor cost on the product, and it's going to be showing up in cost group 3 for this specific operation. All right. So if I go ahead and look at my costs in my manage costs item price, then I can look at my cost roll up by cost group, and it'll give me those. It'll give me a roll up for the costs that are associated with those various cost groups that we were saying. And these overheads are coming from the costing sheet.
Catherine?
Yep.
We've got a quick question from Thomas. He is asking to know what type of costing method you are using.
The costing method for this particular item is standard cost.
Thank you.
So there's various, obviously, there's various costing methods, and that is actually our next poll. So I'm going to switch back over to the poll here, which is which inventory valuation that you use, or which inventory valuation method do you use? Go ahead and check those.
Yep. And I will close the poll in 3, 2, 1 and share the results. 41% are using FIFO, 50% are using standard, and 9% are using weighted average. No one is using moving average.
Okay. And moving average, I believe, was introduced in 2012. And it works similar to the standard cost. However, okay. I got a new computer and it's acting a little bit different than my old computer, so I keep clicking and it's going forward, so I apologize for that. Standard cost works a little bit, the weighted, or the moving average, sorry, works mostly like standard cost, except for it's actually, it behaves like standard cost to a certain point, but it's taking the average, of course, of the last costs that are happening with that product. So as far as FIFO goes, and I didn't look back this, and I'll show you a FIFO product that's got a cost sheet associated with it when I go to the demo. Most people are moving, so most people are FIFO and standard cost, quite a bit more on the FIFO than I had anticipated. But I'll show you what the FIFO looks like as far as what the price, how the estimate goes with the production order as well. We'll just do a quick one there, and then we'll run through the standard cost item that, and we'll run through the production order on the standard cost item that I just showed you the details on. So as far as the production order goes, we're going to go ahead and estimate first, and then we start the production order. The estimate has no impact on the general ledger, and the start would not either, or the start will, depending on your flushing principle and when you actually post the route card and the picking list. When you post the route card and the picking list, then that's going to increase your WIP and decrease your raw materials, or the materials that are going into, or inventory that is going into your product. And then if you post the route card at that time, it's going to make an impact on your absorption accounts. So it'll decrease your absorption accounts or increase them, whichever way you want to think about that, because it's a contra to an expense, but it's going to be, so it'll be posting that at the time that you post the route card. And then the next step after we start that is going, or after we do that, is going to be the report is finished the report is finished process. So that's going to take the amount out of WIP that got put in there when we posted the route card and the picking list. It's going to create a cost for the finished good or the work in process item. Some people have the sub-assemblies, and they're not phantoms. Then they've got to go ahead and do the report as finished for the WIP item, and then that goes into the finished goods next. But this is going to create a physical inventory cost for the finished goods at the time that you do the report as finished. So when you do the end, that's the financial end. It's going to reconcile any cost differences. If you're on FIFO, you probably noticed it can revalue it later depending on the status of the financial costs of the components that are on the bill of materials. So for instance, if I have a receipt of an item and not an invoice on a purchase order that's going into this product. And then later on, when I do the invoice matching, it changes the price. Then you do a recalculation. It's going to also change the cost of the product that you produced. So the FIFO can revalue later, the standard does not, but it's also going to post your variances too if there's differences between. Some people don't do any actual reporting. We've got quite a few customers that just post, just backflush and it'll post as expected, so they're not checking the difference between the estimate and the actual. It's always going to be the same. If you are doing if you are capturing the actuals as far as the picking list, if there's substitutions of products or if there was more product used, then that's going to create variances. If you're posting actual labor, then that's going to create variances there as well. You'll be able to see the estimated versus the actual cost. So the ending financial inventory costs, that basically means that you can't do anything else with that production order. If you do a report as finished, if you don't end the production order, you can always make adjustments to the production order, and that'll adjust the cost prior to doing the financial end. So the end is a final. It's a very final, and you just have to do an inventory adjustment after that if there's changes that you find out after the end. So next is another demo. We'll go back into AX, and then we'll walk through a production. We'll do a walkthrough of the production order. See that? Okay. So in order to walk through the production order, of course, I'm going to go to production control, and all production orders. And I'm going to start a new production order for this D0002. And I'll go ahead and create that. And then this is based on, of course, how I do my setups, but I'm going to go ahead and estimate it. Once I estimate it, then I'll have the ability to go into the view and look at the price calculation and see how this is going to, what the cost is going to be. This is a standard cost item, so this is the cost that it's going to end up being. And if I set up the way that I've set up the costing sheet, if you remember, because I'm looking at the costing, I have the costing sheet up here, then I've got these summary items here, and it'll summarize the same based on the cost groups that are associated with the materials and the cost categories for the labor for the routes, if you recall when we were looking at that. So this is the way that you set this up is going to be the way that this is going to show on your estimates. So as far as this is a costing sheet goes, we don't have any variance yet because we haven't done any transactions. So we'll go ahead and minimize that, and I'll go ahead and start the production order. So once I start the production order, and I'm actually going to post the route card and post the picking list, that may or may not be the way that you're doing this forward flushing. If you're doing it based on back flushing or backflush, it's not going to happen until the report is finished. If you're doing actuals, then you obviously would be updating your picking list and your route, your operations as you go. So if I go ahead and start this, it says, yep, everything has posted. And at this point, then I can view what's gone on in my production posting. I can see that the material consumption has happened. And if I look at my ledger voucher, then I'll see that this amount went from raw materials to my production, or my work in process materials. So I got $124.58 of materials that are standard costs from the bill of materials that are going into WIP, and then my absorbed internal logistics cost is coming out of this is my absorption account and going into WIP as well. It's a little it's this one down here. If I look at my route consumption and I go into the voucher there, then I'll see that this WIP is also going in at the time. This is from the route card posting. So I've got WIP overhead going into my indirect labor cost, and then I've got WIP labor going into my direct labor apply, or I'm sorry, the other way, direct labor apply going in WIP. So then at this point I've got all my WIP components posted, and that's because I posted the route and the picking list at this time. So my picking list is there's 3 lines on it. This was from my bill of materials, and they posted because of the way that I had set up my start, and that's what's created the information in the work in process. Same with the route card. I've got these 3 lines from my operations, and they got posted at the time that I did the start. But if you don't do it at the time you start, whenever you post this picking list is when the work in process is going to be starting. So I can go ahead and do my report is finished now. We've got one good quantity. Go ahead and say OK. So of course it's giving me indication that it posted properly. Then if I go into my production posting at this time, then it's changed. I can see it's added this report is finished so this is going to take it from my WIP and put it into my finished goods inventory. So I've got, and this is the absorbed machine depreciation cost is happening at this time as well. So I've got my, whatever happened in my WIP is going into my finished goods inventory at the time I do the report is finished. This still is going to be a physical inventory at this time. It's not financially updated because I haven't done the end. So if I do that, we'll go back and go ahead and end this. And this ending process, some people have it on a batch process. Some people have you do it one by one as you're looking at if there's any variances that have to be identified. So this end process can vary from customer to customer. So once I've ended it, then I can go back and I can look at the production posting one more time, and I've noticed that I have a costing line on here now, and it's the same amount, or it's not the same amount, it's very slightly different, 6 cents different. But so what happened there is it basically, since the standard cost, it just basically goes through and it just updates all of the costs and puts this to financially updated at this time. So the financial cost of the inventory is available at this time. So you probably noticed through these multiple vouchers or looking at the ledger that there's quite a few different postings that happen when you go through the production posting, and we are actually going to walk through that. So I put a FIFO BOM in here. I didn't show this as much during the Tampa section, but the production posting on the FIFO is going to be very similar. So I've got material consumption, route consumption, my indirect costs on the bottom. Those are going from my absorption accounts or my finished goods inventory. This must have been a finished good inventory that was on the bill of materials, and then it's going into work in process. So once you do a report as finished, then it's coming out of WIP and it's going into my finished goods. So this one had a finished good that was making a finished good. That's why we had finished good inventory on both of those. If I look at I have the ability to look at my price calculation on this specific. This is a FIFO. Again, it's FIFO. It's got the sheet associated with it, the costing sheet associated with it. So this is what the individual components are of my FIFO end product here. So I can look at the costing sheet in the same manner, and it's got the segregation based on the costing sheet that's applied to this product as well. So the FIFO, I believe, and I wasn't able to go back and double check this in 2009, but I believe there was some limitations on the segregation of the costing in 2009, but this is looking very similar to the standard cost as far as that goes. if I look at this item number, and I don't have an active price, if I do a calculation on a planned costing version, since it's FIFO, then I can say okay. And it does give me the same thing. It gives me the summary of the components that are in my, so I can see the cost price per unit, what makes the what makes that cost up, that it's giving me a 1270 price with my calculation, and I can see what the components are of those as well.
Catherine?
Yes.
We had a question a few minutes ago. I didn't want to interrupt you, but the question from Kelly is, what would cause two materials consumption lines to appear in production posting?
Two materials consumption. So if I go into production posting here and I've got two material consumption lines, I think there's a couple things. I'm going to look at this one. So there's a couple things. This one it depends on if it's doubling it and it's consuming the products twice, because I have seen that before too, and that's a setup issue. It's a setup issue if it's consuming your products twice on there. It could be a setup issue with the way that you're doing your back flushing or your forward flushing, or how you're doing your flushing could actually duplicate the cost. This one has 3 material consumptions, and the reason for this is that I actually did a where you want to check how things are. If you change setups or if you do new setups, then I would always recommend reviewing the production order costing. If you've got your setups correct, everything should tie out. So your inventory should match your inventory valuation report. There's reports for your work in process that should be matching your financial statements as well. So from an accounting standpoint, it's important to have the setups correct so you don't have to do general ledger transactions, of course, at the end of the month, or not understand what's causing variances, or what's in WIP and why WIP isn't matching my subledgers, and those sorts of things. So at the end of the day, if everything's set up correctly, then all of your general ledger accounts should be matching what you expect in your subledgers. And AX is back in 2003, that was one of the reasons why I picked it for the first company that I put as a customer, just because the way that it can recover from, very good at FIFO recovery from a negative financial inventory standpoint, even negative inventory, physical inventory as well. It can recover the costs well, but also its ability to stay in balance. So if you've got everything set up correctly, then it should stay in balance. Everything should match your general ledger and that sort of thing too. So I've seen it. I've seen people not think that it's going to do it, and then they become believers later. So it's always a good process to make sure that you go through and review that what you've set up it's actually working through. And we can do this, of course, in the test system, which is the recommendation as well too. Is do the setups, test in the test system, make sure that it's all posting as you expect, and then doing the setups in the live system. So material consumption obviously is going to be raw materials if there's substitutions. Sometimes I don't have the product that I need, but I can use a different product, so I want to do a substitution. That's going to could cause a variance depending on the cost of that. Route consumption, of course, that's my labor absorption, and it could be my overhead too. Again, if I don't have the costing sheet of my actual time, if I've entered that, then that's going to be posted into the general ledger as well. Report is finished. Indirect costs, it's my work in process. Again, that's my finished goods, and it's going to be my indirect cost absorption too at that time. And then my costing is just reconciling my cost differences. It could also be updating costs if it's FIFO. So one of the things that I like to do to make sure that everything from a financial standpoint is working out well, and definitely we walk through this with our customers so that they can go ahead and do this too, is if you notice, and I'll just make a note of where I'm getting this all. So there's multiple vouchers that are going on. There's multiple vouchers because it's posting so many different transactions. There's multiple vouchers. So I make a note of what the voucher is on each one of these. This one doesn't have a voucher. All right, let me go to one that's ended. So I make a note of the vouchers that are getting assigned to each one of these transactions, because I can see all the vouchers together. Because you can do this as you go, and you can see that these things are, this is what it looks like it's supposed to be doing. But from the standpoint of understanding that it's actually posted correctly all the way through, I go to General Ledger, Inquiries, Voucher Transactions, and you can put all of your vouchers that are associated with that production posting, and I've got 4 here. I can do that at one time. If I go ahead and say OK, then it'll bring up all the transactions that are related to this. I actually modify this window slightly, and it's not a modification necessarily. It's I personalize, because when I push it out to, there's things on here that I don't necessarily care about, so I just get it to the point that I'm wanting it to be, which the name in the front is very important. If I don't recollect my general ledger accounts off the top of my head, but anyway, I can go ahead and export this to Excel. And once I export this to Excel, I can just go ahead and look at what my what's going on with my postings. So if I look at them one by one, I can see my raw materials inventory has gone out, and then it goes in and it goes out again, because the costing voucher makes extra transactions. It seems like extra transactions, and that's one of the things when people start AX is get a lot of questions as, is there any way to not have all these transactions happen? But it's actually performing a function, so these transactions are important, but it does cause a lot of transactions, and it makes it a little more difficult if you're looking line by line through the general ledger. So here I can see at the end of the day, my raw materials inventory was reduced by $124.58, which is what I wanted to have happen. And then I would go down the line. My finished goods inventory, of course, was increased by $148.42, and so on and so forth. So I can see my WIP. My WIP has not cleared. And the reason for that is that this one particular WIP has an extra financial dimension on it. So if I look at all of my WIP accounts, or my 150-100, which is my WIP account, then I can see that it's zeroed out. So this may be a challenge. I'm not sure if it seems like it might be a challenge if you're looking at your balance sheet, which isn't necessarily typical, but if you're looking at your balance sheet in a segregated manner with your financial dimensions, then it doesn't look like this one is going to necessarily balance because it's pulling it out. Putting it in, and it's never coming out of that particular one. It's coming out of this general one, and that's one of the challenges to trying to put financial dimensions on your inventory items, of course, is that the posting here is going to potentially not do what you want it to do. So that's a little bit of a gotcha to make sure that you're looking through all of these to make sure that they're coming out as you would expect. So if I go through again and so I can do this so on and so forth. Of course, my WIP labor is zeroed out. That's what I expected to do. So if I'm looking at from an overall standpoint of trying to make sure that all of these transactions that are being posted, which there's 34 lines that are associated with this one production order in my general ledger, then I just shoot it out to Excel, do some quick filters, make sure that all of the transactions look right, ins and outs and the totals, and then I can see that that's worked properly. All right, so the last thing is to look at a couple of different production reporting. Of course, there's a lot more than just these two, but if you're looking for differences, cost estimates and costing, and the variance analysis statement are a couple good ones. This will give you the fixed versus variable costs and what's going on with those as far as variances. Subtotals by cost group is a cost estimate, and costing, you can get subtotals by cost group, which is nice to be able to segregate that out, and I get my estimate versus actual, of course, there. So there is the ability, of course, there's multiple multiple screens that you can view as well, and I'll go through that from production control. I'll go back to production orders, and I will look at this particular one because I believe that that one has got the variance in it. So yes, so here, let's go back here. So my production P01372, I do have the ability to look at variances if I go into my price calculation, and I can see this is where we were when we did the estimate and the costing sheet, and the variance button doesn't show up until you actually do transactions against it, and then it'll tell you these are the 4 different kinds of variances that you can have during your production posting, and it'll tell you which section that the variance, and then what the total of the variance is. So if I look at my standard cost transactions, it'll do a little bit more breakdown here with my quantity and substitution, what's going on with the different variances. So in this particular one, I did more labor. I had more labor, actual labor was more than what I expected, which is what's causing this variance. And then I also had added extra material that I had to use in this as well. So this is what would happen if you're pulling actuals, if you're counting actuals rather than doing just posting back flushing or forward flushing with your estimates. So you will be seeing some variances there, and you'll be able to dig into those a little bit more to see if there's something else that's wrong. So the cost estimates and costing is in the analysis section of the reports. Here's some balance that we were talking before about work in process and direct. So this gives me some WIP ability to look at there too, but this is the cost estimates and costings. I can look at a series of production orders, for a particular date, or I'm looking at this one particular production order. but typically if people are running through this on a daily basis, looking at the cost estimates and then going ahead and doing the ending, the financial end, might be a report that they're looked at, or this is one of the recommended reports that are looked at. This is the same one I was looking at that has the variance. So the standard cost, which is what's going to post to, but it's the estimated cost of $148.50, and I actually have a variance of costing of $169.40. So when I look at the consumption here, these are, I actually expected $293 here. It's consuming $293. It looks a little bit different because I've got a specific resource that I estimated, and then if I use a different resource in my actual, then it'll change it and it'll show on different lines. So the total is fine, but if I estimate with one resource and use a different resource, you'll see here it's just a different resource, it's different lines, and it'll show it on different lines. So here I can see that this is $12 estimate on the cost, this is $16. So the difference, there's a difference there, so I can, if I needed to look into that, why did it take, 2 hours when it's supposed to take an hour 50, then I can dig into that a little bit more there too. So that's the cost estimates and costing. The other report, which is in the inventory management, is under analysis. It's a variance analysis statement. You do have the ability to have different column headings here: cost group type, fixed variable, position, and I had this one as fixed variable so that you can see that there's different columns. It's not actually segregating anything into the different column. Everything was variable from the standpoint of what the analysis or the difference was, but you'll be able to see the total variance if it's fixed or variable, and then what the particulars are on the variance there too. So I've got about 5 minutes left. I know people were asking questions. I know there was a couple questions in the meantime, but I've got my information, my contact information here. I have my Twitter handle on here. I don't tweet a lot, but that's one of my New Year's resolutions, is to increase my my amount of tweeting this year. So that's my Twitter handle. But if you've got a particular question, you can certainly email me. Otherwise, I can have a few minutes to open up for any additional questions.
Thank you very much, Catherine. We don't have any in the queue right now, but let's stay on the line for just a minute and see if anybody enters any questions or would like to ask something.
Sounds good. And again, I appreciate everybody's time. In attending this webinar.
We just have a comment that said, great session. Not a question, but a comment. So
thank you. That's fantastic. We'll take comments as well.
Yeah, exactly. Oh, will you be sharing the slides from AFDIT? Yes, we will. Because you signed up for the webinar, you'll receive an email that has a link to both the webinar recording and the slides within the next day. And then we have a question from Adrienne. On the costing sheet, can an indirect cost be set up for a warehouse or only at the site level?
Only at the site level. But you can get very granular. I don't necessarily, you have to be fairly, particular about how you set up the costing sheet, but you can actually set up the costing sheet for groups of items or actually down to the item level. So you can get pretty granular. It just means that the more, of course, everybody knows, the more granular you get, the more administration there is going to be in order to keep that up if changes are made once a year.
Great. And then Nancy, you had a question about we want to, can non-AXUG members watch this recording, please? We want to share with our customers and get them to join AXUG. You should probably email me about that and we can talk, customers can get access to the recording themselves on the site if they sign up for a trial membership, which is free. So we can talk about that if you'd like. Hello, if you're still there, Catherine.
I am.
Yes, I'm hoping folks are. I lost my audio connection. We're having electrical issues out here, and I'm wondering if it's due to the weather. So I apologize. But we had a couple more comments. Right, about the audio. So I hope I've addressed those. But anyway, I hope, Nancy, you heard my comment when I lost audio when I was talking. And I said, please email me about sharing the video with, or the recording with your non-AXUG members. And I can also walk you through how to set them up for a free trial membership. So anyway. All right. Any other questions? No, I don't see anything. Well, with that, I will close the webinar and thank you all for attending.
Thank you, Julie.
Yep.